$1.4 trillion wiped out in a single trading session. Nvidia lost $279 billion in market cap in one day. AMD dropped nearly 11%. Broadcom fell 14%. Marvell collapsed 17%. The Nasdaq had its worst single day since April 2025, and it all started because of one number that came in just $700 million short of expectations. $700 million triggered a $1.4 trillion wipeout. Here's what happened, here's why it matters, and here's what nobody is telling you about what comes next. Broadcom. That's where this started. Broadcom is one of the biggest AI chip companies on Earth. They reported earnings on June 3rd. Revenue was $22.2 billion, up 48% year-over-year. AI semiconductor sales hit $10.8 billion, up 143% from a year ago. By any normal measure, that is a monster quarter. But here's the problem. Wall Street wasn't asking how good the quarter was. They were asking how good the next quarter would be. Broadcom guided Q3 AI chip sales at $16 billion. Analysts expected $17.2 billion. That's a $1.2 billion miss on guidance. Broadcom guided Q3 AI chip sales at $16 billion. Analysts expected $17.2 billion. That's a $1.2 billion miss on guidance. And then, critically, Broadcom did not raise their full-year forecast. No raised guidance. Guidance miss, and a market priced for perfection. The sell button got hit hard. Let me give you the numbers because they need to be heard out loud. Broadcom down 14% in a single session. AMD down 10.86%. Marvell down 17%. Nvidia lost $279 billion in market cap. Total market value destroyed across the AI chip sector, $1.3 to $1.4 trillion in one trading session. To put that in context, that is larger than the entire GDP of Australia. Gone in a day. I want to be careful here. I don't predict markets, and neither should anyone else. But in a recent video on this channel, the AI bubble video, I said something specific. I said that big tech is spending $690 billion on AI this year. And that MIT research found 95% of organizations are getting zero return on their generative AI investment. I said, and I want to read this back exactly. When the CapEx cycle stops, the stocks priced for it don't gently drift lower. They reset. Broadcom just reset by 14% in a day. This is not vindication. It's a data point. And the data point says the market is no longer asking whether AI demand is real. It's asking how much of the future is already priced in. And right now, the answer is a lot. This is the most important question nobody is asking. At those multiples, there is no room for anything less than perfect. Broadcom reported AI revenue of $10.8 billion, up 143% year-over-year. The demand for AI chips is absolutely real. The business is growing at a historically extraordinary rate. The problem was never the business. The problem was the valuation. Many of these semiconductor stocks were trading at price-to-earnings multiples of 50 to 100 times. Long-term investors who stayed patient in 2002 came out ahead. The recovery happened because the underlying business is strong. But the volatility happened because the price was stretched. Both things are true simultaneously. That is exactly what makes this market so difficult to navigate right now. This content is AI-assisted and for educational purposes only, not financial advice. A bubble doesn't pop all at once. It cracks. One earnings miss, one guidance cut, one data point that doesn't match the story. And then it recovers, and people say it was a buying opportunity. And then it cracks again, a little harder, and the recovery takes a little longer. That pattern, crack, recover, crack harder, is what happened in 1998 and 1999 before the full collapse in 2000. We may be in the cracking phase right now. We may not be. The difference depends entirely on whether AI starts delivering the revenue that justifies the spending. Broadcom grew AI revenue 143% and the stock still dropped 14% because it wasn't enough. When 143% growth isn't enough, you are in a market priced for something beyond extraordinary. And those markets are the most dangerous ones to be wrong in. Let's break this down into 3 specific things you should do right now. First, do not panic sell. If you own diversified index funds, this volatility is noise. Long-term investors who stayed patient in 2002 came out ahead. Second, know what you own. If your portfolio is heavily concentrated in individual AI stocks or semiconductor ETFs at 50 to 100 times earnings, understand the risk you're carrying. A $1.4 trillion single-day loss is a preview of what repricing looks like at scale. Third, watch the earnings calls this quarter. Every major AI company reporting in the next 60 days will either validate or crack this story further. Listen for guidance raises, or the absence of them. The market told us something this week. It told us patience with AI spending is running thin. Pay attention to that signal. This content is AI-assisted and for educational purposes only, not financial advice. $1.4 trillion in one day. Buying opportunity or the first real crack in the AI bubble? Drop your take below. I'm Marcus Vale. Follow the money, not the noise.